Here are some of the top practical ways to predict if a stock price is likely to rise. 1. Technical analysis. Moving averages. Look at short-term and long-term moving averages, e.g., 50-day versus 200-day, to determine trends. If the short-term average crosses above the long-term average, a golden cross, it's typically a bullish signal. Support and resistance levels. Identify key support, price levels where a stock tends to find buying interest, and resistance levels, price levels where selling pressure tends to increase. A break above resistance or below support can signal a price move. RSI, Relative Strength Index. If RSI is below 30, the stock is considered oversold and may be poised for an upward move. Conversely, if RSI is above 70, the stock may be overbought. MACD, Moving Average Convergence Divergence. A bullish MACD crossover, when the short-term average crosses above the long-term average, can signal potential price increases. 2. Earnings reports. Strong earnings growth. Stocks that consistently report strong earnings and revenue growth are more likely to rise. Positive earnings surprises, where a company beats analysts' expectations, often lead to significant stock price increases. Guidance and forecasts. Positive future earnings. Guidance from a company can result in stock price appreciation, as it indicates management's confidence in future growth. 3. News and sentiment analysis. Positive news events, announcements such as new product launches, strategic partnerships, or regulatory approvals can significantly impact a stock's price. Monitoring news and sentiment around a company can give early signals of potential price increases. Social media sentiment. Platforms like Twitter, Reddit, e.g. Wall Street Bets, and StockTwits can provide insights into the sentiment around a stock. If social sentiment turns positive, it can often lead to stock price increases, especially if there's a viral discussion. 4. Insider buying, insider purchases. When executives and insiders buy their own company's stock, it's often seen as a sign of confidence in the future performance of the company. Insider buying can often lead to increased stock prices, especially if the transactions are large or frequent. 5. Volume analysis, unusual trading. Volume, a spike in trading volume, often precedes significant price movements. If a stock's price rises along with increased volume, it may indicate strong buying interest and a potential price increase. Accumulation distribution line. This indicator tracks whether a stock is being accumulated, bought, or distributed, sold. If accumulation increases, it suggests the stock price may rise. 6. Analyst upgrades. Analyst ratings. Watch for upgrades from top analysts. When analysts increase their target price or upgrade a stock from hold to buy, it often causes a boost in stock price. Target price increases. If multiple analysts raise their target price for a stock, it can signal strong future performance, leading to price growth. 7. Sector and industry trends. Strong sector performance. Stocks in strong sectors, like technology or healthcare, often rise when the entire sector is performing well. If your stock is in a sector experiencing growth, there's a higher chance of it rising. Industry-specific catalysts, a positive trend or development specific to an industry, such as new government regulations, technology advances, or increasing demand, can lead to stock price growth for companies in that industry. 8. Short interest. Short squeeze. If a stock has a high short interest, a lot of investors betting against it, a positive news event or earnings report can trigger a short squeeze, where short sellers are forced to buy back shares, causing the price to rise rapidly. Low short interest. A low short interest suggests less risk of a short squeeze, but also can indicate a more stable stock with more room for upward movement. 9. Macroeconomic indicators. Interest rates. Stocks tend to rise in a low interest rate environment. When interest rates are low, borrowing is cheaper, which can stimulate economic growth and increase stock prices. GDP growth. Strong GDP growth often indicates a growing economy, which tends to support rising stock prices across multiple sectors. 10. Corporate actions. Mergers and acquisitions. News of a merger or acquisition can lead to a spike in a stock's price, especially if the acquisition is seen as accretive to the target company's growth. Stock buybacks. When a company announces a buyback program, it reduces the number of shares in circulation, potentially driving the stock price up due to improved earnings per share. 11. Price to earnings, PE ratio. Undervalued stocks. A low PE ratio relative to peers or the industry average can indicate an undervalued stock, which may rise in price as the market adjusts to reflect its true value. Improving PE. An improving PE ratio, especially after a period of underperformance, can suggest that the market is starting to price in stronger growth expectations for the company. 12. Volatility, VIX, low VIX. The volatility index, VIX, measures market fear. When it's low, it generally indicates a stable market, which can lead to stock price increases. Conversely, a high VIX suggests market anxiety, which can lead to price drops. 13. Market sentiment indicators. Put-call ratio. A low put-call ratio, more calls than puts, indicates bullish sentiment, which can signal an upward price movement. Investor sentiment. General market sentiment, measured through surveys or sentiment indices, can help predict whether a stock is likely to rise based on overall optimism or pessimism. 14. Dividend yield and growth dividend increases. Companies that raise dividends often do so because they have strong financials, which can attract investors and drive up the stock price. Dividend yield. A high dividend yield relative to the market can make a stock attractive to income-focused investors, potentially driving up the price. 15. Global events, positive geopolitical events. Events such as a trade deal, peace agreement, or resolution of political instability can lead to market rallies and increase stock prices, particularly in sectors that benefit from these developments. By combining these practical methods, especially technical and fundamental analysis, investors can identify stocks with the potential for price growth. However, stock price prediction is never certain, and using multiple approaches to confirm predictions can increase the chances of success.